Hello everyone. Just wanted to make a video about compression today. I did one already with expansion, which was I guess that it was a good video on a strategy. So let me go to the screen I have shown a couple of times already. Let me go there. So basically what I'm trying to do here is to identify in the beginning of the day, what I'm trying to identify is what type of day I am going to face. What is my bias for the day? So I have to be cautious of what the day before in a couple of days has been. So if a couple of days before I have had a large move, then probably the market needs to breathe a little bit, and that is what we call compression. So the market already made a move and then it started to consolidate. So there's going to be a battle in between the bullish people and the bearish people. So buyers and sellers are going to go in the battlefield and determine if they are going to remain in compression for how long, and then if they break, they are going to go back in expansion. So that is what I'm doing. So compression is basically to trade in a range. So then I'm gonna go a little bit faster in this one, because what I'm trying to do today is to identify what compression is and how I recognize the compression. So okay, so basically once I identify the compression or expansion market, then I'm going to get the analysis. So basically determine what are the areas of support or resistance, or the lines of support and resistance for that day. Okay, so then based on that one, I'm gonna try to find the good setups to trade. So I'm gonna concentrate in this area today. Just as a reminder, you identify the day, then you identify the analysis, or you put the analysis in your charts, and then you identify the setups, and then the good trades are the ones that you put you execute your trigger based on the setup in the right support and resistance level, and then that one would work the best if you have identified if it's in compression or not. So let me go here. This I talked a little bit of this in a different video, so I'm gonna go through. But basically, you have expansion when the markets are moving directionally. So basically, you are buying in this area, put the stops below those areas, and then try to get to the targets, right? So here you would have one target there based on that, and then the second target could be that one up here. So this is not a good area to buy. This is a good area to sell once you have bought already. Okay, it's not a good area to sell either, because you don't have this one. This trend is going to start moving higher, and then this one is going to try to meet it, and probably is going to either move horizontally because already moved, or can come back, but this distance here get reduced significantly over time. Same thing with here. You go in directionally to the downside, put the stops above, and then try to sell the closest to this area as possible, and then bought them back in this area here in a bearish strategy. So basically this is the thing, right? In the bullish market, you identify the setup at the level of support or resistance, and then you take profits looking at the left. So if your price is around here, look at the left, and then you say, okay, this is my first target, or I close the trade right away, or I wait until it goes all the way up. And so the final target would be the other side of this channel, because there's a good possibility it could break, but it's a good possibility that it will come back to get that. So you may have another opportunity to enter it up here or down here. Okay, so let's talk about compression. So what is compression? Compression is when the market consolidates after a move. So basically the market goes into areas of expansion, which we saw there, and then compression. And then most of the time, if you look at the time passage of trading, most of the time the market may be in compression. The moves of directional moves happen fast, so if you catch them, you're fine. But the market tends to be in a battle in between compression and compression in that battlefield. What I wanted to say. So let's look at this. So. This is the market is kind of like trending higher in this range, but it's in compression. See, you have similar lows, similar highs here, similar high here, similar high here, similar high here. So you can say, okay, this is a level of resistance, and it's in this case, it's trending bullish, right? So you were saying, I mean, it's the bias is a little bit bullish, but then you have you're in a range, so it goes up and goes down. You don't know to where that one is going to break, but it's trying to break there, and it's coming back, and it's trying to break there. So if you're trying to if you're a break a trade or a trader that is going to trade the break, then probably a good breakout is going to be up here at that level, probably above that little wick you see there. Okay, so basically this is what I see, and this is a real case. So this is what I see when I get to my computer at 8 a.m. So this tick here, and this one is a tick bar. It's not a Renko chart, but it's a tick bar. Why do I use a tick bar? Just because and this one is ES, and it's a 1500 tick chart. Okay, so why do I use this? Basically because each one of these bars are number of contracts. Each one of these are 1500 contracts, right? So I can see that based on the number of contracts, the market moves to the in this case sideways. It's moving up here, and it's sideways, and it's moving down. So if every 1500 contracts, I do have a candle. Now I identify support or resistance, right? So I could have a break to the downside here or a break to the upside. So it will depend on what the market and what the market participants are going to do. Okay, so basically, if I see a tick chart, and this is the same chart here, it's a little bit distortion. So this candle here is that there, but you see this one here and that one there are these two supports. So basically, if you put the volume box here, and I'm gonna show you that indicator. It's in NinjaTrader, so I'm gonna show you that indicator later on the video. So basically, what you see here is that you have a bunch of contracts traded at this level, right? So you have this area there, you have this area there, all the way to the end, right? And then some few contracts that were in the upper side up here, right? So that one there is that one there, and then this one, this a candle moving up is that one over there, but it's not that much volume. The big volume overnight from 4 p.m. Or 5 p.m. the last night all the way through today. I mean through 8 a.m. Before the opening, that it's going basically there. There's some few contracts here, but not that much volume in there, right? So what do? Okay, at 8 a.m. I determine this, and I decide where are the most areas of touching. So you can argue that the most volume is there, and that is what the recent activity went. So all the way in this box here, there's some there's some big volume right there, and then not that much volume here. So one thing that you could do is to paint your Fibonacci extensions box in that area, right? So but basically what I'm seeing here is that the market might move sideways for the day, because this market is not moving directionally, even though it's a little bit in a bullish mood, right? So that is what I do. I go there and I mark, my fib areas, and then I do have this, gray box in the middle, and this one is the magnet for me. So I before I go to the day, and it's still I'm at 8 a.m. doing my analysis, right? So when I look at this, I say, okay, so there's a move here to the downside. Probably this one was around 3 a.m. or something like that. And then moving up, and then, it's moving down. But basically, the activity is sideways in this channel. Now, when the market tries to go right there, so there's, that area there. So made a touch and then came back, made another touch. So this area in black here is areas of resistance, of support. So it goes all the way up and then try to remain in this area here. Okay, so now the market has not opened yet. It's 8 a.m. So now I'm gonna look what's going on with this area, right? If I maintain it all the way through 9:30 a.m., which is when the market opens. So go all the way there. And the market didn't break to the upside, but broke to the downside. So it came here to these levels of support and then moved there. Now, if you look at the volume boxes, now there's a little bit of higher or different distribution here. This area here started to make some good development, right? So we do have here an area that there were very few contracts traded at this green area, but now when it met this area, it started to get some additional volume. There's this bar, and that bar remains about the same. But these bars in the lower side of the chart would remain, would start to increase, right? So that one there, this one here, that one there, and that one there are kind of like the first four. The first four and maybe the fifth, it remains the same, but this here started to increase the area. So here you have the red areas are areas of resistance. So good areas for to put to look for short trades and short setups and short triggers, and then the green areas are good for bullish trades, so long trades, long entries, and long setups. Okay, so let's go to this one. So if you see here, then what I'm doing in here is to modify, because it's 9:30 now, I'm looking for this range. This range is a little bit wider, and at 9:30 what I would do is to look for a different area. Now all of this area, which is kind of the same picture as here, the only thing that I'm doing is to modify the range. Then I do have a wider range right here. Okay, so in this case, now my area, and probably you would be okay if you put it like only there. I expanded it all the way down because there was a little bit of, you know, double bottoms maybe, or a good resistance area in here just at 9:30. Okay, so I'm leaving this one here. Then you see that why this one would work, right? So let's go to the chart. This one is actually what happened on this Friday. It was the 17th, so yesterday, June 2022. So let's go to the chart. Let me go here and put this tick chart right there. Okay, so I can explain it better, what would be the dynamic of this. So first of all, let me go to the indicators, which is this icon here, and I'm gonna so if you go down, you look for volume zones, that one there. So what I do is to just double click this one, add it there. This one is for a 1500 tick. There's I don't change any of that. Okay, so it's the preset standard indicator. Okay, so and this would give me a good idea on how to identify this. So what is going on in here? So I'm gonna put it in the area where I go here to 9:30. So just simulating that we are at 9:30 a.m. A little bit wider right there, 9:30, and then from yesterday, right there. Okay, so from the day before there. So this is exactly the drawing that I was showing in the other chart, right? So here is the area. Okay, here is the area, 1500 tick. You know, you get and now you have to decide if you're going to trade in this area or you are not going to trade in this area. So basically what you would do is to try to put order. So if you have a setup for longs below this line, and then bearish orders for triggering above this line, because the market is gonna try to go to the center. There's a little bit more volume in here, but we will see how it will develop. So I do have this one. I expect that the market is going to be a range market for the day. Okay, let's see what's going on. So I'm gonna start moving this one to the right side here. So we give more space, and now we don't need that volume indicator anymore. So what I'm gonna do, I'm sorry. Okay, what I'm gonna do is to hide it a little bit. Not gonna put no visible, and I want to remove it from there. I do have my areas now, so majority of the contracts are in this area here. So market open at 9:30. So I'm gonna paint this one there, 9:30, right there, and then opening range is at up until 10 a.m. So so you see it's in the range. So facing a little bit of resistance up here in the upper side of the gray area, 951 resistance, and 10 a.m. Okay, so let's mark 10 a.m. just to notate the opening range right there. So the market is moving in between here, down below here, and up here in a range. And this one is governed by the overnight range that we just analyzed. Okay. So and before that, before I go there, you know, this is the day before, and there was a big move. This one is a spike all the way down, and then it started to go through this bearish channel all the way down here, and then at the end of the day, it started to react to the upside. But there's a huge volume in this area right here. So probably because of this spike right to the downside from the day before, then most likely the market needs to rest a little bit. Okay, so let's keep moving this one to the right side, and I'm gonna reduce that one and start moving here. Okay, so market is going sideways, and the other thing is that that happened here is that the market was in a bearish mood, and coming into this into this area, the market is still bearish. Okay, so it could bounce back up, but so that is what you have to. That is where the uncertainty is, right? So, but the market is going down. We initially in here we were thinking, okay, this one it may break to the upside. It looks like it is going to do it because this area here it's moving to the upside slowly but surely. It's moving to the upside until it found this some sellers in this area up here and came back down to the other side of this volume thing. Now it's breaking to the downside, right? So now we are looking for, in this area here, we are going short when it broke here, right? But we are oversold, let's put it that way, all the way up until 36, 34, 25. So we need to look for setups. Now we are looking for setups. Remember that this area here is a magnet. So so what we are looking for is bullish setups. And I'm not gonna talk about setups here, but basically you're looking for bullish setups. My setups are given in Renko. So so in here I could have a in a Renko chart and also in this one. But in so I do have a trend reversal. It went. Let's put a line right here, right? So in this area we're looking for bullish things. And this is what makes it complicated. So there you go. You have a trend reversal that could go all the way to the center of here, but then you're looking for targets. So the first target could be that one. Second target could be that one. It depends on what your strategy is. Okay. So you see here it went all the way up, came back down, up, up, came back down, and you know, okay, but it's coming back to the gray area right there. There's a lot of sideways movement here, and then go all the way up to the other side of this area. See? Not looking for setups. I'm looking just for direction of the market. The market, you know, came back down to this area, which is resistance. I'm sorry, which is a support, found some setups here, resistance, and then started to move up, then came back down, then up. But basically what we're looking for is it returns to this area where before the market was higher in volume. Okay, and then let's see, it's 1 p.m. and now the market, and also it was a Friday. It was expected to be a range day. Look at this, right? Look at this. Side movement all the way across, and the day was over. So yeah, range day worked pretty well on this Friday, and we were looking for, you know, longs in this area here. Let me paint it with a box here. So this area here, right, is we're looking for longs. This area here, we are looking for even, you know, more bounced here. If it went all the way down here, there's a good in this area down below here, there's good probability that the market was going to bounce out of this area because we are in the range market. Same here in this area up here. So you get you know, in this area here or this area here, these are good for shorts. So looking for setups that are going to go back to this area here. In the center of it. Now, if it moves all the way up here, we are looking for, you know, the market. We need to respect what the market is doing. So if you have the price moved all the way up here, I would be hesitating to buy more at this area. So probably I would be looking for returns to this area. Or if the market is doing a new movement in this area here, we have like a new channel, and then we can look for breakouts or breakouts and then come back to this area as well. Okay, so so yeah, so that is a theory on it, and you know, this the idea why the market is ranging. It remembers this are tick charts, which are contracts. So people are consolidating here. They are battling. They are in this area of and they are battling, and they are, you know, defining. The more candles you have, the more candles you have in this, try to put it from the day before. 2, 6, 4. The more candles you have, the more contracts you are going to get, and then the more, you know, the more volume you are going to have in this volume boxes right here. So the spikes are going to be much larger. Okay, so yeah, so that is a range market. If you have any questions, please put it in the comments, and if you like the video, you know, click the like button and subscribe. And sometimes I put some I would put some additional content here in this channel. So hope you like the video, and see you next time.